Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of July 22nd, Tuesday. And here we are probably in the 535, 540 time frame at this point. You know, an interesting day. What we saw was a loss that is continuing of the S&P stocks and the Nasdaq versus coming to life in the Dow and the Russell stocks. So what you're getting here is very healthy. You're getting markets that are saying maybe the tech stocks got a little too expensive. Maybe it's time for consolidation there. And at the same time, the beaten up stocks, maybe it's time to lift them back up. And that's what I think the thinking was today. In the metal markets, how can you get away from the idea of the inflation? Each day that goes by puts you closer and closer to whatever the tariffs are going to be. We saw two countries did sign today with the U.S., the Philippines and Indonesia. That is great. In bad news, we saw GM take a big hit today because of tariffs. And, you know, it was about $1 billion hit. That's a lot of money for the quarter that they got hit with. They didn't lose money. They made money on the quarter from what I saw, but it's money that's going somewhere. And that money, that's the problem. Just where is it going? In terms of data tomorrow, you're going to get the Mortgage Bankers Association. That comes out at 6 a.m. Existing home sales data for June will come out at 9. You're going to get the petroleum stock estimates at 9:30. As we come in, we look at the charts. You know, let's assume the market ended right now. Even with the sell-off that you had today, this would be an all-time high close for the S&P. And it did squeak out a minor gain today, but this is awful big sideways action that is suddenly taking place. The pattern also got a bit sloppy. You now have a pattern here that, I'm going to move this so you can see it right here, a lower low and a higher high pattern. That's not something you write home about and say, oh, this is phenomenal. It's a stall pattern for the moment. To get the bull market going again, you've got to take out the highs of Monday, the 21st, when the market was at 63.74. Barring that, let's see what the market's saying. Barring that, you have the upper Bollinger Band, where I think the resistance is going to come in. I've been pointing that out each day. And you're flirting. The word is flirting with losing your bullish embedded reading. If this closes under 79, there's a big problem then. And this market could easily, and I want to make this clear to you, easily then get back down to the 6,300 area, which is 50 points lower. It's not the end of the earth before it encounters major support. In the Nasdaq, here too we are backing off, but here too you lost the bullish embedded reading, or you're in the process of losing it. You did not lose it on the close today, but you're losing it right now. And if it stays lost, I think you'll go back to the 18-day average of closes before you get over that high. And the question is this a top that the market is making short term as we come to the end of the summer months? In the Dow, the market worked off being being oversold. Overbought, let me say that correctly. Overbought when it lost the embedded reading, and now momentum's coming here. I used the wrong word. When you have a bullish embedded reading like you did right in this area and you lose it, you become overbought. To get that down, you either re-embed or the market has to get both numbers under 70, and that's what it did. As we take a look at the Russell, it's the same type of story. Look at other markets coming back down from there, and that's exactly what I expected to do. In the DAX, well, we've turned a little bearish right here because you could say that you have a pattern of lower highs, lower lows, and the market wants to run into the lower Bollinger Band at 44.28. The 18-day average is the battle zone. You've been there how many days? 1, 2, 3, 4, 5, 6 days in a row, just hanging at that number. And while that happens, you take and wrap the Bollinger Band top and bottom closer to the markets. In the bond market, you ended a bear phase. That does not mean it can't come back, but you ended it. When the market cleared this high, that's the importance to me over here, you came back up and are hanging at the 18-day average as the market wants to hear what Fed Chair Powell's speak is going to be, and that's coming up, I think it's tomorrow or the day after, and of course the Fed meeting next week. I do not believe the Fed chair, when he gives a speech this week, will talk about monetary policy, number one. Number two, I don't think he'll even address that they're kicking him or trying to kick him out of office and that he'll leave. I know some people think that that's what he's going to do. I certainly hope that's not it. And when they say he's not doing a good job, none of the Fed chairs do typically a great job. They do okay depending on the circumstance. And the circumstance here is, I don't think it's that difficult. He has two mandates, and the mandates are full employment, which we have, and the control inflation. You don't do that by breaking interest rates, as the president seems to think. Just because Europe did 10 of them doesn't mean we can. When we come to the dollar index, by the way, the president doesn't mention that because of the strength of our economy, that's part of the problem. Right? He talks how great our economy is, but he never says that's one of the reasons we can't break interest rates is because we are keeping inflation under control. He wants the economy to just keep getting stronger and stronger. And I get that, but there's a point where you got to be careful. In the dollar index, you've now ended this wave to the upside, at least temporarily. You stepped out of the pattern of continual highs and lows right into the Bollinger Band, and now you've broken that pattern. Time to be sidelined, and you've broken the bear pattern in the euro and put them back into no pattern if they go up the upper Bollinger Bands to resistance. I mentioned to you for the past 48 hours in these videos that I thought we could make a run at the 18-day average in the pound. We're just about there, as you can see. A Bitcoin, before you get up and through this high, the odds still favor price and the 18-day average could come together. Then we get to the energy complex, which is caught in the narrowing of these Bollinger Bands. Forget if it's bullish or bearish. These bands have gotten so narrow that just trying to trade them could be very detrimental and very hard for you. And notice as you come up to the bands, what's happening. See that right here? You're running into the resistance area. What's the pattern? Well, with tonight, you can take this arrow off and you have lower highs, lower lows, but you're staying over the 18-day average, which means the bias is up. In the gasoline market, starting down again. So the market did its darn best to hold the 18-day average. It gave up today. So that could put the market on a path to come to the 100-day average along with the lower Bollinger Band. You're in oversold territory, so it's logical to see if it can find support there. And last in the nat gas, even with this heat wave, we're not moving much. Not moving much is always a problem for the market, and you can see that happening right here. Now, I do want to remind you that you can get our free offers. They're so simple to get by just clicking on the icons above or going to iraepstein.com, free offers. Sign up for any you want. You come in, you just go to the free offer page, you click on the blue, and when you finish that up, just fill out the information so we can email everything to you. I'm Ira. You have yourself a great evening. Talk to you tomorrow.